2015 were record investments in renewable energy to the tune of $285.9 billion, up 5% in 2011. More striking was the amount of generating capacity that added to wind and solar. So to talk more about clean energy, renewable energy, we'll have Mohammed come forward to talk about it as it relates to the opportunity for international involvement, development, business, and change. Mohammed? Wayne Mohammed. Yalla Mohammed. I just thought I saw him. Hey Mohammed, I just brought you on. I just read your to talk about. You want me to do it again? Okay, we'll talk about
Okay. Best morning again, everyone. Hello. Best morning. Today we'll try to have a working session together, and we'll try to have apply a real case into, let's say, a wind energy project or a solar energy project, and we'll try to raise capital for that project. And what we will do is that, because we already talked and presented already what we called yesterday the most active region for capital deployments and investments in the world, which was, we named it yesterday GCC, the six main, Oman, and of course the finance center of that region, which is Bahrain, and the capital of that region, which is Bahrain. And so that region houses the most active sources of capital around the world. We'll try to go through them. So we'll try to list the main sources of capital in the region, and then we'll try to select one category of sources of capital, which are, I would call it the most active and the largest as well, or second most active but also largest. And we'll try to have a real case and try to approach and raise capital from them. So what will be our approach if we don't know them and if we don't know their procedure? And I just actually made this presentation now, 10 minutes before. I just went into the website of one of these sources of capital website. I just selected some of their website pages, just cropped them and pasted them in the presentation, just to show how really how it can be done fast and easily, and how we can just understand it together. Okay? Okay, so in the GCC, the main... you need to make it probably. It's okay, it's okay. Okay, so in GCC, the main sources of capital, basically we have the countries, I mean, these are kingdoms, and these are oil-producing countries. And so it is natural to find that, I mean, to notice that the main or largest source of capital in that same country is the president or the king of that country. And so the richest players in Kuwait are the royal family of Kuwait, which is each GCC country. There is a royal family, and it is the richest, I mean, batch of players, the richest family in the whole country. And so our first category of sources of capital is the royal family. And royal families are usually very active, very opportunistic. They don't have a specific, how to call it, investment criteria as listed. So they look at opportunities one by one, and when they like the opportunity, they go for investments. But they usually don't go for, I would say, 30, 40, or $100 million investment. They would prefer to have larger amounts of investments, larger chunks or pockets, because of lack of human resource. These countries, lack of people. They have, let's say, in Abu Dhabi there are about 1.5 to million people, UAE, and because there are so many people, and the royal family needs to manage that huge wealth, like Sheikh Mansour, for example, is the second category. We said royal families, and then we said royal family members. When we said royal families, it's usually the chairman of the family, which is the chairman of the country. Royal family members are usually the brothers. Like, let's do this way. We take Abu Dhabi as an example. So Sheikh Khalifa, he is a royal family. Royal family member is Sheikh Mansour, his brother. He has about 340, 350 billion dollar net worth. And so he owns Petroleum International Investment Corporation. He is major shareholder, and he is also major shareholder in many other investment institutions in Abu Dhabi. So that is the main source of capital, royal family, and then members. The third main source of capital, or category of sources of capital, country strategy. There are sovereign wealth funds, which we call the future generation funds. And basically GCC, they set up those sovereign wealth funds, especially to invest outside their countries and to diversify from oil. So they invest in everything but oil. And they invest in every country but their country. So those are the main sovereign wealth funds. We'll list them later. So we will later on select sovereign wealth funds. We will list them, say how much excess under management they have, and then we would try to raise capital from one of those sovereign funds. So that was the third category. Fourth category is usually PE platforms. So private equity platforms. Usually an investment management company who would set up a platform either in a form of a fund, private equity fund, or corporate structure, or any other structure where they can get the money in and then deploy the money out into projects. This can be also a favorable platform for green energy projects. If it is a green energy private equity dedicated platform, that platform will be, of course, exclusively investing in green energy projects, and they would obviously divide or do their asset allocation into different green energy projects. So they would do wind energy allocation. They will do usually their strategy, they divide by continent, then by country. They select the less riskiest countries, and then they select also by sub-industry. We talked about green energy, they would go for wind, biomass, solar, or others. So these are private equity platforms. These two categories, so we said royal families and royal family members are very opportunistic. So their offices or office CEO, they listen to you. You have a good technology, gives them, because these players look for first large deals, but also some game changer opportunities, as we call it. So some interesting opportunities where they can make sense of that investment. The second category, no. The second category, they have clear, transparent investment criteria and investment strategy. Whether they are government funds or PE funds, they have very transparent rules. And they have minimum investment amount, maximum investment amount. If they invest into a project, the project must be at a specific stage and must have specific criteria. For example, we take the case of a green energy project. We have a wind energy farm. If you come with a wind energy farm or a project and you want to raise capital, obviously they would ask you, the first thing they would ask you is the licenses, all the approvals, and of course with it, the long-term PPP, the power purchase agreement. So then they know. They will put the money, they will invest with you, but they will also maximize their chances of success for your project to succeed. So all these issues we'll treat them later, we'll go back to them later. So as sovereign wealth funds, PE platforms have clear, transparent investment criteria. Family offices or multi-billion-dollar family office, these are either different families that were or are still very close to the royal family, that are doing lots of business with the royal family, and because in the Middle East these 6 countries are tribes, so everyone knows everyone. If you get into the circle of specific players, they will obviously introduce you to their friends, friends of friends, and the category of family offices or multi-billion-dollar families, and the high net worth individuals, which are also part of the family office. So family office, they have a chairman, the oldest person in the family, which usually manages the wealth. If that person is retired, is honorary chairman, but also they respect it a lot and they listen to it a lot. So the family investing as a family, or members of the family, which are very wealthy, investing as high net worth individuals. So as we see, these are 6 categories. We divided them into 3 different subcategories. So 2 that are very opportunistic, 2 that have clear specific investment criteria. The third ones are very sophisticated investors. Also, they are very opportunistic. So they have different platforms and different teams that look at different industries and different experts that when opportunity comes, they study it thoroughly and then they tell you whether they are in with you or not in this project. We'll go to... Here we selected a few of these sovereign wealth funds in GCC. These are the largest ones in GCC, but there are many. So ADIA, Abu Dhabi Investment Authority, is by far the largest, used to be the largest in the world. Actually, they compete with, what was the country? Norwegian. So with the Norwegian Sovereign Wealth Fund, usually from year to year, one is higher than the other. So ADIA is the largest sovereign wealth fund in GCCs, and probably this year in the world. No, this year, I mean probably this year or last year was the first one in the world. Is a $773 billion excess under management sovereign wealth fund. Saudi Arabia Monetary Agency, their excess under management is increasing. They are increasing their oil production, and they have about almost $600 billion. KIA, Qatar Investment Authority, $335 billion. OSGRF, Oman State General Reserve Fund, about $100+ billion. These are approximated numbers because these players, they are not very transparent. And there is the Sovereign Wealth Fund Institute that usually every year publishes a report. And with the best they can, they guess, but it is an educated guess. So they go through fact findings with these funds and their teams, and they try to find out how much excess under management that fund has in that period of the year. So Oman Investment Fund, about $60 billion. Mumtalakat is the smallest actually in the region, with about $18 billion. So there are many sovereign wealth funds. Let's say in average in 6 GCC countries there are about 18, which makes it 2 to 3 sovereign funds in average in each country. For example, in Abu Dhabi we have listed only ADIA, Abu Dhabi Investment Authority, but there are many others. There is Abu Dhabi Investment Council, which is the sister of young sister of Abu Dhabi Investment Authority, and they both get their allocation directly from ADNOC Group. So what we call the incomes of the country goes to Ministry of Finance, and then they have their yearly allocation of capital, which they try obviously to reach the target and deploy it internationally. Okay, let's go to here. These are the informations I got also from the website of Abu Dhabi Investment Authority just now. All of them have very close strategy. Okay, so a sovereign wealth fund will first allocate its assets by region. So they will look at the world, they will say, okay, Africa, Asia, America, Europe, Oceania. And we will do asset allocation by continent. Here is the Abu Dhabi Investment Authority asset allocation by region. So in North America, minimum investment is 30%, 35, is between 35 and 50% of the total assets of the fund. In Europe is between 20 and 35% of the total assets of the fund. Developed Asia, 10 to 20% of the total assets of the fund. And emerging markets, again, 15 to 25% of the total assets of the fund. After doing that, let's now go to one category, We go to the second slide and we select probably either North America or Europe. Let's do North America. So we said it's 35% to 50% of the total excess under management under that fund, right? Can you, brother Wesley, go to the second slide? Okay. These are between 35 and 50% of the total excess under management in one continent. Here they divide them by industry. So after dividing by continent, they go by industry. Here, developed equities, emerging market equities, small cap equities, government bonds, credit, alternative real estate, private equity, infrastructure, and cash. So what they do, they have specific departments. They have an internal equity department, so internal team, their own team, which has an allocation which manages money and invests directly into stocks. Okay, this is their own internal teams. They also hire external teams which also do the same thing in stocks and other securities, but they are external teams. The third thing is that they invest heavily in hedge funds. It's almost the same thing, but this is a third-party manager which manage third-party money and also their money, by the way. So hedge funds, they also have an allocation for that. At the same time, they would also have different departments. On this one, is different from sovereign wealth fund to another. Okay, so it's infrastructure and real estate. So from sovereign wealth fund to another, you see that infrastructure and real estate sometimes are in the same department, sometimes not. But we should, of course, go through this basic process, going into the website and just checking. Okay, here they have both departments. Can we go? I think it's still both departments. Just, yeah, this one. Go down. Can you make it smaller? Bigger? Yeah. Actually, I'm talking about this slide. Sorry. Here you go. So here, infrastructure and real estate. Infrastructure and real estate. So is the same department. From sovereign wealth fund to another, yeah, they are separate. Here they merge them in one department. Aside from the department of real estate infrastructure, alternative investments, which we just talked about them, indexed funds, internal equities, external equities, they have also the private equity department. So if we have a green energy project, let's say a wind farm, where we will, which department will we go? We won't go to private equity department to link projects. And so these are long-term projects with very low risk. And those funds have very special appetite to invest in long-term, long-span investments with very low risk. Why? Because they get their money from oil. And oil market is very volatile. Yesterday was $120. Now is about $30, $40. Now it reaches $50. But it went from $120 to $70, $80, reached $20, now is back to $50. And so oil markets are very volatile. And these incomes come from oil markets. And so they try to get incomes from oil market and stabilize them into different, by diversification. And so why they like this capital parking investment? Because when you have a green energy project, you have a power purchase agreement of about 10, 12 years or 8 years, and you have already calculated your risks, and you know for a certain amount of risk, you will have for the coming 8, 10 years that much money. And so that stabilizes the revenues of the fund. So that was regarding real estate and infrastructure. Let's do slightly the decision making. Okay, let's look at the whole structure. Can we kindly make it smaller? Okay, we make it more smaller. Okay, we make it a little bigger. Okay. So here let's here are the different okay. Here are the different components or departments in the fund. So on this side, these are the 6 main investment departments. 2 years ago, there used to be 7, 8 departments. now we don't see it in the website. This fund and all the sovereign wealth funds in the world, they have, aside from a department for each specific industry, they have a special situation department. Why they have this special situation department? They use it when the ministry or when any other government entity wants to invest in oil and they don't invest in oil, they direct the investment from the special situation department. So, as we said earlier, sovereign wealth fund, they don't invest back in their country, they don't invest back the money in oil and gas, but they have that special situation department for which when they are asked by the leaders of the government to join hand with the ministry or with the national oil company or with any other entity in the country that is investing back in oil and gas, they direct the money from the special situation department. Okay? It was for me. So these are the investment department. Here are support department, HR, and these things. So here are the main departments which will decide, the decision departments. Here they have obviously the evaluation and follow-up department. So it goes here. These departments, they just make sure that the project matches with their specific investment criteria. Then they take it back to the evaluation department, which will follow up with it. And here is the strategy unit, which has a strong say on the project. So basically, you give the project to the necessary department, you follow up with the necessary strategy units, which are, for instance, at this stage, strategy units, the head of strategy units of unit of Abu Dhabi Investment Authority, Farouk Bastaki, and Nikhil Daum. The chairman is obviously the royal family, because that money also belongs to the country, but also is in the other pocket of the leader. Okay? So we discussed green energy project. We tried to raise capital from a fund. I just went to the website, Abu Dhabi Investment Authority.ae. Just check these 3 different departments, seeing how much they allocate, how much excess under management they would allocate for America, how much of that they would allocate for green energy or infrastructure projects, and seeing which department I would talk to, and I've sent to that specific department, infrastructure, and followed up with the evaluation department, and met the strategy department, and then that's how you should do it.
Normally they don't meet.
Yeah, that is the last part. Because
They
it
don't
is
answer your telephone or email.
because it is very hard to meet with these players. So education is good about these funds, and to know how much assets do they have, how much do they allocate for each region, for each country. The only barrier at later stage is meeting those people. And so you should really have something very special, and they should know you to meet with you. If not, they won't set up the meeting, because out of, I would say, a few hundred calls, you should know them, so then you can meet them easily and very fast set up with them the meetings. But for newcomers to just look and call them, it's I would say it's impossible to do that and to meet those people and to present your project. One is hungry now. Doctor, would you like to say a word? Not words. Do you like to say So, Dr. Farza will take the lead. Mike?
Since you very well opened the subject of large-scale capital raising for the various projects to enter the new markets. US companies raising capital from GCC, going to new markets, whether it's China, GCC, MENA region, Africa, or elsewhere. You opened this subject, so I just add a few notes. As you mentioned, there are 6 categories. The royal families, the non-royal but top financier and business families, called family offices, then the institutional, like banks and other private equity funds. Then there are the pension funds, and then we will have also Islamic capital that is an independent series of sources of capital, and then the oil petrodollar, those that invest directly in oil, energy, and alternative energy assets. Each one of them have a range. For example, Kuwait Investment Authority does not invest in anything less than $1 billion. And they don't go, the lowest they did was our case in China, $520 million, because it was the first time ever in the world history case, so they made exception. But with US companies, they don't go anything less than 1 billion. The same type of organization, Abu Dhabi Investment Authority and Abu Dhabi Investment Council, they can go anywhere from $50 million to $500 million, or at the smallest amount, they can go $30, $50 million also. Some families, such as the Sheikh Mansour family or the Das Holding, Mr. Khaled Al Mas, again, they won't go anything less than $1 to $2 billion. So they have the economies of scale. But then other families, let's say in Oman or Bahrain, they go 20, 30, $50 million. So they have first the range of investment, that they have preferences. Two, the categories of investment. For example, Oman Investment Fund invested a lot in real estate, and then they have too much exposure, and then they decided they will put a break on real estate. So they don't invest anymore in real estate, but they want, for example, high tech, and they want, for example, IT. So then they put 1 or 2 years focus on this sector, and then another year or two they change the sector. For example, Qatar Investment Authority, Dr. Hussein Abdullah, who invested with us in the ICBC Bank and then Agricultural Bank and then Citic Assets, then all of a sudden said, okay, Farzam, we have now enough of the banking investment. So go to the consumer items. So consumer items includes health, includes the online consumerism, so Alibaba's and these kind of entities. So then they have not only the size, but also the category or industrial preferences that changes from time to time. It is not fixed. And then they have the methodologies. They don't go with the startups unless the startup people are those who are so famous and did several rounds of startup, and then they went either public or sold at a large scale. Otherwise, they don't go to startups. But they do definitely go for unusual, high-tech, consumer, the one that can be stamp copied and grows low. Some of them, they will say they don't invest in the early stage, but private people will do. So you have to go 2 rounds. You go first with private, some of the sheikhs or the royal families and others who just like an idea, or a research institute. The research institutes have funds and they like your technology to be developed in their country, so they put money, 20, 30, $50 million. But then when it becomes larger, then you go back to sovereign wealth funds or the top royal families, and then you go to the 500 million to 2 billion or whatever. And the good thing about the sources of capital in GCC is called capital on call. They invest in every stage of your development. They invest in as we know, investments are in different phases. What we call concept level angel investment, and then prototype onward is called VC investor. When you are already small scale of market, then you become early PE investment, and then when you are later in the growth phase, we call it full PE investment, and then if you are going to go IPO, it's called pre-IPO PE investment. So even PE investment has 3 categories. Then you are on IPO, and so you have post-market investors. So usually in the past, the angel investment and VC investment was very popular in Silicon Valleys and in the US, and they dried. The same thing, so very few people now globally invest in angel level of investment. VC is still very active in China, but not so much in the GCC. So most of the GCC, they go for larger projects and more mature, especially the institutional ones. But some private families, they take also earlier stage, but not anymore only on the level of a concept. You must have had, you have had 10 years of research. and you have some ready-made products, and some products still have mining. So some, very few, they go to the risk level investment early stage, low money, high risk, but once they get rewards, it is high rewards. Normally, when the cash liquidity is very large in the market, people go for the risk level of investments. When liquidity is not so much, they don't mind to pay higher price for investments, but they go at a later stage of investments. Our Bright Oceans Corporation does investments anywhere from the small, let's say $3 to $5 million to $10 million on very good potential high-tech industries, especially in information technology, in health, in the sectors that we are cluster sectors, or in agriculture, or biotech, or in a few other areas. But also we do have ability for larger investments, like mining and oil and gas, anywhere from $50 million to $500 million. And if it is larger, we bring the other national companies of China with us. So we are talking about the availability and the type of capital for your projects, and when you talk to your other businesses that you are talking to. Basically, at this time, the sources of capital that are active globally are mostly, number one is China, number two is GCC, and number three is back to US and Europe. And in different times, sometimes GCC has been more. GCC in the bulk total number and outbound investment has been larger than China. But China is pushing the agenda of the New Silk Road. What the New Silk Road means is, in one word, means outbound mostly. So that means the Chinese going outbound to sell products, goods, services, capital investments, and to joint venture with US operating companies, European operating companies, even buy assets here or buy shares in those companies and take them global. So the market stage, China 1.5 billion versus 5.5 billion globally. 200 countries in the world, China is one country. So the China is equivalent of 40 to 50 countries. So US capital should be active in China. US projects that need capital that cannot raise it in US can also think of raising it in China, but also in GCC. So with us, we are not geographic limited. With Future Trends, Kingdom International, Bright Oceans Corporation, we are global. We have resources globally. So we are not limited. We are interested to raise capital from US, for US companies, and take them global. And we are interested in banks and financial institutions that are brand names who may even have projects in China or in GCC or MENA region, but still, we don't call them as if they are present in China. By our standard, if you only have 5, 10, 20 projects, you are non-present in a market that is so large. If you are superficial, fragmented, and you are not deeply involved, you might as well just be only in Mexico or be in Tajikistan. Why you should be in China, where the China is 1.5 billion population. If you are not in 200 countries in China, having 200-300 projects like the Jiangtai group of Thailand has. Small countries, Thailand, India, Tartar group, they have much larger project investment broad-based in China than the US corporates, even some large corporations. I tell that the US corporations in China are, for the most part, non-present. Only Procter & Gamble, Pepsi Colas, and maybe IBMs and a few Motorola's used to be present in China, and most others, there are only a few cities and fragmented and a few projects. Yes, Cargill is in about maybe 100 projects in different cities of China. But most other US corporates are very, very shy. Case for globalization is a very important message for the US corporate decision makers and the local governments to encourage them to move globally. Not only they get larger markets, they do that more easily than they do it in US. The US legal systems and the procedural system have become so difficult that it's no longer the best foreign direct destination invitation. But China excelled US in foreign direct investment destination 18 years ago, not 5 years ago, 3 years ago, long time ago. But again, don't feel the negative competition. The more you go out, the more you partner with China, the more you enter China, the more you go with China out to the New Silk Road, the larger you get globally and the larger your home base becomes. So there is a fallacy to say, oh, US companies going out, it is as if they are exodus That's why I said to the media, please write this word, and still they didn't write, but they must learn to write. The case for globalization of US companies is to strengthen their home base. They become bigger in their home base. Is when the tree has more leaves and branches and fruits, the root becomes stronger. So never misunderstand. We are not talking about US companies losing base and ground. We are talking about accelerating their larger scale market share globally in China, with China, via China to other countries, which is better for their home countries. So this is, and then we are talking about how to fuel it with the sources of capital. So every time we talk about business development, we have mastered it as a system. Early stage, small capital injection. Market in China, market globally, expansion, fast growth. After fast growth, larger capital injection, then capital market exit. And the capital market exit could be go on public listing, and even if you are a foreign company in China. So basically, the world with no borders, it means you must be geographic agnostic or neutral. You must be value system, have no fears, oh, US is losing jobs or companies are exodus. No, no, no. You must, the farther and the more you go out global, the more your home base becomes competitive and stronger. So there's a lot of misunderstandings and fallacies that I always say I regret how US was the pioneering spirit. It taught us to be not conservative, to be liberal. The word liberal came from the US systems, from the founding fathers. But we are discovering that the US corporate and even government are most conservative now. And the traditionally closed and conservative systems such as China are most liberal. So there is a reversal, and we don't want that to happen. That's why we are here. We are the only group that is saying the new Silk Road, which we recommended to the Chinese government and they adopted, and they are executing it. We are saying that the US should not be absent. US must be strongly present. I hope all of you take this message to your clients, partners, wherever you are. We are not valuing this only as a few friends who are partnering with us to do business. We are valuing it as a team building, those who have new vision of the new world order and want the US interests to be protected and increased as a stakeholder rather than being diminished and out, which is not good for world order and stability. So we want much larger, we don't want the growing countries such as China, the Arab world, and Africa in the future have US containment mentality. We want them to have US participation mentality. We want US to continue in favor of that, but not absolute. Because absolute contains you. So we have business messages, and we have strategic messages, and we have geopolitical win-win-win situation messages for the US. We want this message over time to be heard to the mainstream America and to the higher and higher levels of the corporate America and the local governments. So in the future, we must encourage the mayors to sit down to listen to the message, not to just come and give us only courtesy, because our message is very valuable for them. And so we have come only a few times, and we are gathering momentum. That's why I'm giving this piece of extra to give the vision that we are practical in business. We do deals. We do deals from the early stage, mid-stage, growth stage. We have all the abilities in-house to do this. But in the meantime, we want much wider and much larger US participation. Not for only our selfish reason to make monies that we also want, because our monies will go to the humanitarian cause anyway. But we want it